Hey everybody, Will Gomez here for the Perpetual Pip, and I want to welcome you back to our next video lesson here, our Market Tutorials Trading 101. This discussion is going to be on how to determine trend direction. Now this is and can be one of the banes for inexperienced traders and even for experienced traders alike. The reason for that is because we have to make sure that we are, just like the market, constantly adapting to change. Market conditions change all the time, and as a result, we want to make sure that when we take the time to figure out what the market has been doing to be able to project what it is going to do, we do so accurately and that we continue to evolve with the changing market conditions. With that said, let's explore this concept some more. The ongoing theme that we have going on throughout the course of these videos so far is that we have this constant battle for control between the bulls and the bears, right? Now, over time, as more and more price action occurs, we actually can determine an overall victor, right? Despite the general ebb and flow. We can see that the market does not generally like to move in straight lines. It likes to move in waves because of the constant struggle, right? However, generally speaking, you will be able to determine overall that one team seems to be winning, right? That's how you determine market direction. And the first thing that you have to do, it starts with just a visual check, the ocular pat down, if you will, right? You're just going to take a visual check of the market to try and figure out what it's doing. If the market seems to create an upward slope from left to right, then it's making higher highs and higher lows. This particular type of market is known as an uptrend or a bullish situation, just like what you have pictured here on the left. The market is generally moving in an upward direction from left to right, slowly but surely climbing to a higher and higher price point. Now, if the market's doing the opposite and it's moving in a downward slope from left to right, it's making lower highs and lower lows. This is known as the downtrend or bearish market instead. When you're getting ready to determine what the trend direction actually is, it is imperative. This is very, very important that you remember this. It is absolutely imperative that you compress the chart. Step one is going to be compress the chart. Now, why do I put so much stress on this? The reason is because there are various different platforms, trading platforms that you can use, some better than others, right? However, a constant that tends to occur on a vast majority of them is that it tends to open up and show you just the last few candles. So it might show you something like this, right? It might just show you this much. Now that's fine and dandy if you have already conducted your analysis and you have a pretty firm understanding as far as what the market has done so that you can accurately project what it will likely do. The market's a creature of habit. The problem with that is that if you're a new trader and you don't know any better, it shows you what could realistically be a very, very erroneous view on what the actual trend is. So I want to encourage you to get into the habit of compressing your chart until you can't compress it anymore. Keep that in mind. We'll get into actual live charting examples later on. But for now, if you're taking notes, remember, first things first, compress the chart. Let's elaborate on this. First, let's talk about the bullish trend line, okay? We identify trend direction visually using a trend line. We draw a line to identify the overall progress that the bulls have been able to make. Your trend line must always be guided by two extreme points. And it doesn't matter if you're drawing an uptrend line or a downtrend line, a bullish or bearish line, respectively. You must always be aware of these two extreme points. The extreme points are the highest high of the entire chart, right? When you compress the chart, you're going to look for the highest high and you're going to look for the lowest low. The reason for that is because you want to systematically, if you identify the extremes of the entire chart, as you conduct your analysis, you're going to find out whether or not that trend is still on vogue, if you will. And you want to systematically eliminate trends until you arrive at the current market. This is the only way. This is not only the best, but it is the only way, in my opinion, to be able to arrive at the current market with firm conviction that the market is going to do what it's going to do, and confidence is going to be key. You have to be sure of your analysis when you're going to make these decisions. We're putting our money on the line. So we want to be sure. And the way to do this is don't shortcut it. All right? So identify your extremes. Once you identify your highest high and lowest low, you'll be able to work to draw your trend line. Some traders may even, I usually teach traders, once you identify these points, put horizontal lines on the chart at those points. But we'll do that in live actual applications and future videos. Anything beyond these two extremes is a potential area of reversal. So you don't want to worry about anything beyond those 2 points until you get there, right? To draw your uptrend line, you're going to begin at the lowest low, and you're going to stretch that trend line across all of the lows before the highest high. Okay? Start at the lowest low, go across all of the lows before the highest high, and do not cut across any wicks or bodies between those 2 points. Don't cut across any wicks or any candle bodies between those 2 points. Now, you may notice that with the trend line that you've drawn, not all of the candles are actually interacting with the trend line. If that's the case, then the trend has become a little bit more aggressive, maybe volatility increased, and so you can draw what are known as more aggressive inner trend lines to account for those lows of support that aren't touching the trend line. So let's explore an example here. Okay, this is a Euro New Zealand dollar 4-hour chart. Now, again, we already discussed. First things first, when I see what I'm looking at, I'm going to compress the chart until I can't compress it anymore. Once I have all the visible bars that I can, I'm going to go ahead and I'm going to identify the point of origin of the trend. I can see that the market is making higher highs and higher lows. So I'm going to identify the point of origin of the trend, the lowest low. The next thing that I'm going to do is I'm going to identify the highest high visible. What some traders do is they'll take a horizontal line and they'll start from below all the candles until they hit a candle, identify the lowest low, and then they start from above all the candles and work their way down, boom, until they hit a candle. That's the highest high, whatever works for you. All right, we'll explore different methodologies on how to do this in later videos and on the live sessions. Once you have these points, you will be able to draw your trend line, and your trend line should only be focused on what goes on between these 2 points. So here's my first trend line, go out and across all the lows, and then I bring the trend line in, boom, it bumps into this wick right here. I don't want to cut across any wicks or bodies. So there's my first trend line. There are still several lows before the highest high that aren't interacting with the trend line. The trend got more aggressive. So what do? I draw a more aggressive trend line, and so on as needed. Now, the rule of thumb, the standard tends to be 3. You have your inner, your outer, and your long-term trend lines. Now, you can add trend lines as needed, but realistically, less is more. So if you have enough trend lines to get the job done, don't go crazy drawing a bunch of lines on the chart. You may end up with the unfortunate case of analysis paralysis, and we certainly don't want that. Again, don't become overly preoccupied with the current market. In order for you to be effective and place accurate trades here, first you have to understand what's been going on back here. Don't be in a rush to get to this and just jump in a position for the sake of saying, I'm in XY trade. It's not worth it. You'll lose way more money than you win that way. So, draw your trend lines correctly, and then you can move on to the more important aspects or the deeper aspects of technical analysis, which we'll talk about in later videos. For a downtrend, it's the same guiding principle, right? You have to be aware of your 2 extreme points, except this time it's going to be in the opposite direction. So you want to be aware of your highest high and lowest low. Anything beyond those 2 points of extreme are potential reversal areas. Don't worry about it until you get there. You're going to begin at the highest high, the point of origin for that entire trend. And you're going to stretch your trend line across all of the highs before the lowest low. You don't want to cut across any wicks or bodies of any candles before then. And If it should happen beyond those points, then it doesn't matter, right? Because that's a potential reversal that you're going to explore later on. If you should come across any highs that haven't been accounted for because the volume or volatility increased, then you'll draw inner trend lines as needed. All right, so here's your example for that. Again, a Euro New Zealand dollar 4-hour chart, same currency pair, same time frame, and this process, by the way, is not isolated to this currency pair and this time frame. This process will be the exact same for every currency, every stock, every exchange that you look at. Technical analysis is technical analysis. If it's a chart, this is how you'll draw your trend lines. You will begin, in the case of a downtrend, starting at the highest high, and you're going to identify your lowest low. Once you have your points of origin and terminus, if you will, you're going to draw your trend line going across all of the highs of resistance this time before the lowest low. Anything beyond the lowest low is a potential point of reversal. We're not going to worry about it. But if we have points that have not really contacted the trend line, we can draw inner trend lines as needed. As you see here, I've opted to leave a more aggressive trend line coming in here because it doesn't really do much more of a job than this inner trend line that I've left there. So again, for me personally, less is more. I can still, after a while, it starts to get a little creepy because you'll actually start to hallucinate these trend lines. If you've done it enough, you'll start to hallucinate these trend lines. You'll see them without them actually being there. That's when you know that you're familiar with it, right? I told you before, I've studied a few languages. I've actually, it's a sign, it's a psychological sign that you're understanding the language when you start dreaming in that language. Same situation here with the market concept. If you get exposed to something enough, you eventually, it starts to become assimilated into the rest of your normal life. So same situation with this. I'm very, very confident that once you do this enough, you'll be able to see it as well. If not, let me know. I'll work with you. Okay? That's what I do. With that said, again, we want to identify the trend lines on a as needed basis, as many as you need to be able to be effective. Don't go crazy drawing trend lines or levels of resistance and support like we talked about before. You don't want to get analysis paralysis. Do only what is necessary. You want to get rid of all of the BS and just focus only on what is necessary, what's going on, what's pertinent to your trade. Okay? Keep that in mind moving forward. Do not become overly obsessed with the current market until the time to trade is upon you. You have to go through this step by step to make sure that you're actually looking at an appropriate entry. All right? And we'll talk about entries in depth in the future. That's our lesson on trend lines. I hope that you enjoyed it. If you enjoyed this video, you like what you're learning, you like what you're seeing, or if you have any feedback whatsoever, feel free to put it in the comments section. If you enjoyed it, give us a like, subscribe, and of course you can sign on, create an account at perpetualpip.com. All of this information is available to you there as well, absolutely free. If you feel that you've learned enough and you want to see more thorough information, or you feel like you're ready to trade in an actual live market environment, join on into our live sessions as well. This has been Will Gomez. Stay tuned for our next discussion. What is a Fibonacci or Elliott wave? I'll see you soon.